Hey, welcome investors to the 40 Finance channel. DraftKings stock is what we're talking about today. I am a holder of DraftKings stock, bought in around the $35 level shortly after the SPAC IPO sometime last year. And DraftKings stock is an interesting one to analyze, certainly for this channel, because it is not a profitable company and there's no expectations of an EPS to show up anytime before 2025 and maybe even 2027. And the game here for DraftKings stock is very, very simple. It's all about revenue. It's all about price to sales. However you want to look at it, they have to continue to outperform on the revenue side so that their stock continues to grow. That's what this game is as far as investing in DraftKings stock. Now, on the bright side, they've had several big announcements over the past few months that kind of build to that revenue thesis. Most recently, DraftKings announced their acquisition of Golden Nugget, which was another SPAC that came in. And what's very interesting about Golden Nugget is they were a leading force in the iGaming sector. And frankly, it was a stock that I almost bought when it first came out. They were really focused on iGaming, and when I say iGaming, it's basically your poker, blackjack, all the different slot machine games that they have on there. But in DraftKings universe and everybody else who is in this game, iGaming is an important revenue stream to build up with your gamers, because if you think about it, if you have, let's say someone who likes football, I like football a lot, and maybe my bet activity doesn't really drift over from the football season to anything. If you have this iGaming component, you can keep people sort of locked on, as well as attract other people that have no interest whatsoever in online sports books, but they will hop on and do some blackjack, things like that. And just to bring the point home on Golden Nugget, you can see the existing market access that they already had. This map over here, the gold ones had both online sports betting and iGaming. So DraftKings essentially buys users across both platforms, the sportsbook and the online casino. And one of the most interesting things I thought in the Golden Nugget most recent earnings presentation was they're finding online casino revenues in 5 states match online sports betting in 15 states. And it's interesting to see how well that side of the business can potentially do, particularly as other states come online. And speaking of other states coming online, that is really the next bull case for DraftKings, is the fact that their market is not done yet. Now, it gets a little overblown on how many states come in and how quickly that will happen and what that really means, because there's so much competition in the space. But the bottom line, even from the highest level, is, it's the same thing as expanding your store count if you were a Target or a Walmart. And DraftKings has a lot of opportunity to expand their store count. And just like a Target or Walmart, every time you open up a new store in a new area, you get new users, right? That you hopefully turn into lifetime customers and users that maybe come in on one level, let's just say a limited spend level, and you try to develop them and get them to a higher spend level. So growth in revenue per user, also called ARPU. If you can get those ARPU levels up, it's another way to grow even when you've opened all the stores that you're going to open. Another market that doesn't get a lot of attention with DraftKings is Canada. And Canada is introducing single game sports betting with the prospect of numerous provinces in the country eventually approving online sports betting, and which would likely lead to online sports or online casinos as well. So there's a game in Canada. Obviously, the opportunity is not as big as the United States, but this thing can grow beyond just the 50 states here in America. All right, lastly, on the revenue side, DraftKings has launched this new sports NFT marketplace, and they're partnered with this company here called Authentic. Several big names involved with this company: Tom Brady, Wayne Gretzky, Derek Jeter. And you can see already here, they had the Tom Brady launch last week. No surprise, everything sold out. and they've got Wayne Gretzky on tap this week. So very interesting to see how this will develop. I love the idea because when we're talking about that ARPU, or the revenue per user, this could be big if they can continue to develop it, right? So it's great to have Wayne Gretzky, Tom Brady, etc. You obviously can't recycle those names too many times. You have to keep digging in and offering different superstars and stuff for people to buy in. But I would say that the prospect here for success is pretty good. And you figure like most sports gambling fans are at least going to have a passing interest in this new wave of digital sports memorabilia. And when I looked at the prices, you can see them here with Wayne Gretzky. They're all different kinds. Granted, you have to get in before they sell out, but you've got low ones as low as $12. And then there's a resale marketplace on there. And each time this stuff happens, I think DraftKings gets 5 to 10% out of each sale. All right, so that's the bull case for growing revenue beyond expectations for DraftKings. What is the bear case? Number one, of course, is competition between BetMGM, Flutter Sports, which is FanDuel. You've got Penn Gaming and dozens of other small players who won't necessarily overtake like a DraftKings or a Flutter, but they just chip away at the available dollars. That's why we're already starting to see consolidation in this space. And so when DraftKings bought Golden Nugget, not only did they eliminate a competitor, but they now have a fair shot of bringing those users into their world by using the brand that the user signed up for in the first place, which was Golden Nugget. So they can operate things that way. And whatever appeal Golden Nugget had in the iGaming space, DraftKings can basically replicate it now, right, by using the brand and attracting the same kind of customer. All right, also on the bear case, it gets back to revenue. If they are not blowing away revenue, then there's not a lot here from a fundamental standpoint for a stock like DraftKings, okay? There's no EPS. You're basically running at a negative margin to come out here in these first few years and build the business. So any little sidestep along the way can just tank the stock, to be quite honest with you. And that's the big risk here. When everything's going well, I can see this stock going up, and I'll make my price prediction here in just a little bit. But if one or two things go wrong, they still might achieve the dream, but it will set the stock back 25% or more probably. All right, let's take a look at the momentum for DraftKings stock over the past year or so. We had our high back in $319, and that was approximately $72. Right around March Madness time. Then it's floated down ever since. And I think if you've watched my other DraftKings videos, this really doesn't surprise me a whole ton. I said that when football season and March Madness go away, it's a very quiet time in sports betting. But we're already starting to see a little bump here over the 200-day. And regarding this death cross here, when the 50-day went below the 200-day, not ideal. But again, it just doesn't surprise me in the summertime with baseball and stuff going on. And honestly, I would expect DraftKings stock to perform poorly in the summertime pretty much every year going forward. There's just not enough baseball action to get people excited. All right, on the fundamental side, this is a stock, again, it hasn't been on the market very long, so we're going to have to take a quarterly view to get an idea of how has DraftKings been valued from a multiplier range over the past several quarters. I'm going to skip right here down to price to sales trailing 12 months, and you can see last year around this time you're at 58.32. And it's went down slowly ever since, as DraftKings has so far outperformed on the revenue front. So this is a good sign in terms of valuation today, though I will say 19 times is not exactly the best deal in the market, but at least they got under 20. And I would say the next goal is to try to get price to sales closer to 10. All right, on the balance sheet side, trailing 12 months revenue, you see here was about $1 billion. Total cash right now of $2.65 billion. Total debt, $1.32 billion. Checking out our short percentage, we want this one here, short percentage of float, 8.94%. Keep in mind that was last updated on July 30th. All right, let's take a look at the consensus estimates from analysts for DraftKings looking ahead. Nothing really to see on the EPS side. Like I said, not profitable. You do have, at least on Seeking Alpha, you have the first profitability potentially of fiscal year 2027. A little too far out to project, I would say. But let's get into the revenue, aka price to sales, and see what we have here. Fiscal year that ends on December 2021, so this year, revenue estimate is $1.9 billion. Keep in mind that the last trailing 12 months, they're at whatever, 1.06. So they'll need to lap pretty hard in the football season in order to meet or beat this estimate. But that would be a plus 100% year over year on the revenue side. And that would bring your price to sales to 1712. Now, the bigger question for me, at least when we look ahead, how is fiscal year 2022 looking? Because we're basically at the end of 2021 in terms of projections. You got a consensus of $1.73 billion on the revenue side. That would be plus 34% from this number here, and that would drop forward price to sales to $12.77. So again, we're getting closer to 10. I wouldn't say 10 is like a magic number, but anything under 10 certainly gets much more reasonable in terms of the stock price. And potentially in 2023, you would actually hit that mark if all of these projections held true. All right, let's take a look at TipRanks to see what the best performing analysts individually have to say about this one. We had an earnings report not too long ago, so pretty good updates here, ranging from 5 days to 10 days ago. And we do have a few holds, 60, 55, and down here is 51. Then if we look at the buys, we have 105, 73, 75, and 61 down at the bottom. So if I had to guesstimate on the buy side between them all, I would say you're in that $75 range. I mean, you have one person coming out at 100. But if you did hit the 75 mark from today, that would be a 40% upside. Now, these projections are coming in for the next 12 months, aka 1 year from now. So keep that in mind. All right, let's take a look at how I'm projecting DraftKings in the future. Today's the 15th and I'm making this video. Current price of 54. Current forward price to sales is 17. 2021 revenue projection, $1.29 billion. Fiscal year is same as the calendar year. All right, so my projection would come in January or February of 2022 when the actual fiscal year earnings report is published. I'm going to say forward price to sales at that time around 15, and I'm going to say my 2022 revenue projection is $1.9 billion, potentially $2 billion in there, but I left it at $1.9 billion. This is for fiscal year 2022. So when we land in January, everything will be looking ahead. The stock analysts will not be talking about 2021 anymore. They will be focused very firmly on 2022. So depending on what comes out of DraftKings' mouth as far as what they're guiding, I'm going to say it gets really close to $2 billion. And when you factor in that this is a forward price to sales of 15, that would bring your price to $80 for DraftKings, somewhere in the neighborhood of January or February of 2022. All right, guys, so I'm projecting $80 for DraftKings as we turn the corner into 2022. I'm expecting the company to outperform on the revenue side by more than what's projected here today. So that's where my stance is. Don't forget that I own DraftKings stock. I'm very bullish on the industry as a whole. but we'll have to see if they can live up to these expectations. It's really going to be a stock that they either crush it, or it could definitely be one that fizzles out at the first sign of weakness. We'll have to see. I like what DraftKings is doing to build that revenue, though, and I think they can get close to $2 billion by the end of next year. All right, investors, let me know what you think about DraftKings stock. Leave a note in the comments. Please give the video a like, share with your friends. Thank you to everybody for your support. We'll see you on the next video.